Today's webcast, Deal Making in 2021, a Q3 deep dive. My name is Matt Toole, and I'm the Director of Deals Intelligence at Refinitiv and LSEG Business, and happy to be joined today by my colleague, Lucille Jones, who is based in London. Lucille, hello.
Hi, Matt. Good to be here.
Great to see you. As we normally do at the end of each quarter, we like to get together and kind of look at the key themes of investment banking activity and deal making throughout the year and particularly in Q3. So happy to walk everyone through some of the key themes that we've been looking at over the last couple of weeks in what has been a pretty tremendous beginning of the year, full year for deal making. From a housekeeping perspective, we will have time for questions and answers, and we'll be monitoring those throughout. So if you have questions, please feel free to use the Q&A box within the webcast player. And also, we've loaded a good number of resources onto the webcast player, which is, hopefully you can take a look at many of the resources available to you, including the Deals Intelligence site at refinitiv.com, as well as some of our most recent blogs looking at the Q3 and first 9 months activity. I created a blog on the overall milestones that we saw, Lucille just publishing a view on cross-border M&A. And then also we have a number of resources for the Refinitiv Academy, which is some online training courses from some in-house experts around some of our deal-making content within Refinitiv. So with that, I think we'll get started. And the first portion of the webcast, just a little bit of a demographic poll to see kind of who's joining us today. And so if we kick off looking at kind of a poll question for everyone here on the line, and we have people from around the world joining, please select which function of banking or corporate finance you work in. So M&A, equity capital markets, debt capital markets, general coverage, private equity, corporation, or other. It would be great to find out who has joined us today, and we'll give you a couple minutes to fill that out. And check out where everyone is joining. So we have M&A, 36%, equity and debt, general coverage, private equity, corporations, pretty even. So a pretty even split, but M&A leading the way, and that is the majority of our conversation today, which has been a really exciting year for mergers and acquisitions. And so hopefully everyone has come with a little bit of a preview for what they see in Q4 and kind of into next year. And so before we start any of the data, let's try another poll. Which factor do you think will have the most significant effect on overall corporate finance activity in 2022? So as we look ahead to next year, government stimulus programs, the effect of or the kind of winding down of those, general economic conditions, private equity or sponsor activity, the trajectory of the pandemic, or rising interest rates, if that should happen. Which effect on corporate finance activity would you think would be most impactful next year? All right, let's see. Okay, economic conditions is the majority right now, quite dominant as far as the overall effect, 61%. So have to see how the economic conditions around the world play out. Rising interest rates, 22%. Certainly there's been some telegraphing that interest rates will begin to rise, and that can certainly affect some of the financing, particularly around M&A and private equity buyouts as well. So a good number of kind of variables into the new year, but great to see what everyone's thinking right now. And I think we'll get into some of the numbers and some of the key details. So as many of you have probably seen, over the course of yesterday and today, we've seen many of the U.S. banks beginning to report earnings. So from a very high level, wanted to look at global investment banking fees, which are currently running at an all-time record. We're approaching $120 billion in fees across all asset classes. And you can see the colored lines on the left-hand side of the screen, the trajectory of asset class growth from 2019, 2020, and into 2021 has been quite significant for almost every asset class. Equity, M&A, and syndicated loans all seeing double-digit increases compared to a year ago. And bond underwriting, which was really the main driver of much of the activity last year, as we saw the pandemic bring many issuers, and from a general industry perspective, and then obviously conditions were so great with interest rates around the world. Bonds are down at 4% compared to a year ago, but really every asset class is very elevated from an overall investment banking fee perspective, and we have seen that bear out in the earnings that we've seen so far from some of the big U.S. banks, and certainly kind of forecasting that in our data. But a 23% increase compared to a year ago, and an all-time high, kind of besting the year-to-date from last year. From a regional perspective, you can see the impact of fees coming from the Americas, which really dominates the overall fee pool. And has continued to grow over the course of the last year with some of the large, kind of American deals that we've seen involving American companies, and also much of the activity from an equity and debt capital markets perspective. One of the things that we're constantly watching is the interplay between fees coming from Europe and Asia Pacific, which you can see in the orange and yellow bars, and that has really been something to watch for the last couple of years. Where last year, for the first time, Asia Pacific eclipsed Europe as a contributor to the overall fee pool. Europe is slightly ahead so far this year, but a good amount of activity coming from both of those regions, and that has changed pretty dramatically over the last decade or so, where Asia has been kind of consistently bringing in a larger share of the fee pool. But really interesting dynamic there, to watch as we wrap up 2020 and move into 2021 and move into next year. From an overall kind of trajectory perspective, you can see kind of the elevation of 2021, and you can see the M&A cycles and the overall deal making cycles in this chart from a monthly perspective, seeing the spikes in 2007. We've been quite elevated for a number of years from an investment banking fee perspective, but all the months this year in 2021 have surpassed and are now leading the way as the all-time biggest month, because as we looked at, all the asset classes are really moving forward quite strongly from a fee perspective. From a M&A perspective, drilling down into one of my favorite charts, looking at the interplay between bulge brackets and boutiques, you can see that the boutiques have actually had a bit of a decline in 2021. Which is a different trajectory over the past, really, kind of almost decade since the financial crisis, where we've seen that rising share of M&A fees from boutique investment banks and boutique advisory firms kind of really continue to grow. We saw that spike last year. And again, it's a choppy market. Deals complete at a different pace. This is all based on completed deals. So we would expect to see that number tick up, because many of the transactions that have been announced this year will continue to include boutiques and have included boutiques. But a big spike for the top U.S. banks, which are the top 5 banks right now, a big spike compared to a year ago. And that share of the remaining kind of regional banks, the regional banks in Asia, in the Americas, and in EMEA, also kind of hitting a decade low, and really an all-time low from that perspective. So definitely shifting business mix between the regional banks, the bulge brackets. We have seen some movement, to the bulge bracket banks in this year, but again, that will change as some of the larger deals begin to complete. But it has been a really interesting year for M&A, continues to be, and Lucille's going to walk us through some of the key themes in the world of M&A deal making that we've been looking at so far in 2021.
Thanks, Matt. Yes, so we continue to see incredibly high levels of deal-making activity so far this year. Global M&A has just exceeded $1 trillion for the 5th consecutive quarter, and the 3rd quarter of this year actually set a new record of almost 1.6 trillion. So very high levels here. It takes the value of M&A recorded so far this year to $4.4 trillion, which is double the value that we saw at this time last year. And it's actually already higher than the all-time full-year value of $4.2 trillion, which we saw back in 2015. So astonishing levels, and I think the chart on the right really illustrates the scale of the rebound that we saw after M&A plummeted in the first half of 2020 in the early weeks and months of the pandemic. Regionally, we saw growth across all regions from the first 9 months of last year. the US on the right, the blue line here, that saw the sharpest decline in M&A last year as COVID hit. A lot of big ticket M&A transactions come out of the US, and these announcements were particularly affected by the downturn. But you can also see the rebound, the bouncing back and hitting new highs in just a matter of, just a few months. So $2 trillion worth of deals involving a US target have been announced so far this year. And that's already a massive 140% increase from the same period in 2020. US deals account for just under half of M&A so far this year. Then Europe and Asia, we've seen less growth here, but we're still talking between sort of 50 to 60% increase compared to last year. So, not to be sniffed at, and particularly that some of these markets have been back in lockdown for some time this year, which is, probably affected and impacted deal making. European deals increased 60% to reach a 14 high of $1 trillion during the first 9 months of this year, while deals in Asia Pacific increased 53% to an all-time high of around 920 billion. The next slide here. So here we're taking a look, sort of a longer view of global M&A back more than 4 decades. So quarterly volumes back to 1980, and you can see the sort of the peaks and troughs around recessionary periods over time, both by value and by number of deals. And I think it's quite interesting to see how long it took for deal making to return after the dot-com boom and then bust around 2000. We had this sort of U-shaped recovery over a period of around 7 years. Until the financial crisis, when again we saw, elevated levels of deal making, which were then, quite significantly impacted after the financial crisis for a good few years. We have seen a prolonged period of elevated levels now, right up until sort of the beginning of last year, where we saw that pronounced drop of activity in the second quarter, which was very, very quickly followed by a rebound in the third quarter. We see this sort of very striking V-shaped recovery here, which is something that we definitely were expecting. I remember in the third quarter of last year, we expected that the new spate of deals could be, just a backlog after a quarter off. But then we recorded in excess of 14,000 deals in the fourth quarter of last year and in every quarter since. So, definitely not just a backlog. We're at very high levels here over the last 15 months. And just interesting to sort of compare it to historical numbers and see different cycles and how this most recent cycle compares. This is a pretty interesting slide as well. So this is a closer look at the number of deals, the sheer volume of deals being announced. And these charts show, number of deals recorded during the first 9 months of the year across various different categories back to 1980. And they show that we're not just seeing values pushed up by increasing deal sizes, the sort of headline grabbing big ticket deals, but we're also seeing new records being set in terms of number of deal announcements. And the number of deals is often a real key indicator of the health of the M&A market. It's, the small and the mid market deals. So we have already seen 44,000 deals announced so far this year globally. And to put that into perspective, that's 29% more than during the same period last year. And it's 19% higher than the previous record. So all-time highs have been recorded across many different categories, and you can see just a few of them in the charts below. So we have seen more cross-border deals than ever before, more private equity deals than ever before. We've seen all-time records set in the US, in Europe, in Asia Pacific, in the UK, in China, in Japan, and across many sectors, including tech, healthcare, financial, industrial, retail, consumer. So the growth that we're seeing in M&A is broad-based. It's not just focused in one particular region or in one particular sector. of the market. And so there are a few drivers. But I think that one very important factor fueling these volumes is the return of confidence. We always say that M&A is a confidence game, and with the removal of many of the factors that created a lot of uncertainty last year, so predominantly the pandemic, but also, you know, presidential elections and Brexit and, you know, recession fears. With the removal of some of these factors, we're now in this environment where deal makers are largely much more comfortable pursuing the M&A agenda again. So last year, at the onset of the pandemic, companies were focused more on their survival and how to ride out the storm, but now they're focusing on growth, and this has you know, resulted in a very strong focus on M&A again. So confidence is high. Corporates are relatively cash rich, with healthy balance sheets, and the capital markets are friendly at the moment. Interest rates are low, so that companies have really easy access to cheap debt to finance their acquisitions. So really good conditions for M&A at the moment, a very friendly environment. So let's have a little look at some of the key areas of growth and drivers on the next slide. So this one is billion-dollar deals and mega deals. So the larger deal size category. On the left, we have mega deals, which we classify as deals worth $5 billion or more. And last year we saw announcements of mega deals, the deals that have, you know, really driven M&A by value over the past few years. We saw them drop significantly in the second quarter. You know, companies showed very little appetite to execute these big deals amid so much uncertainty that the pandemic brought. But then, you know, coinciding with the lifting of lockdowns and supported by a gradual economic recovery, these mega deals returned in quite a big way. And we actually finished the year with a total of 110 mega deals, which was 13 more than 2019. And, you know, these announcements keep coming. We've already seen 136 mega deals globally so far during the first 9 months, 2021. And that's double the number recorded during the same period in 2020, and actually more than the 4-year record, which was set in 2015. So they're certainly driving a large amount of value activity. Their combined value is a massive $1.6 trillion. So I think that's around a third of M&A. On the right-hand side, we're looking at the size band just below. So this is the 1 to 5 billion size range. And we've seen huge growth in this category. You can see the big spike there this year. So the number of deals in this size category has increased almost 170% from this time last year. And again, you can see the spike in both number and value of deals. So a lot of activity in the larger deal size categories. And this is a trait of a more confident market where buyers have the conviction to make these larger investments. Before we move on to cross-border, we're going to do another quick poll to get your opinions on the types of M&A transactions that we're most likely to see in the short term. So this time we're asking what activity will dominate M&A during the fourth quarter and into 2022. And you can choose from mega deals, industry-driven transformation, in-market consolidation, geographic expansion, or restructuring and retrenching. Give a few seconds here. And we can see a clear winner here, which is industry-driven transformation is the winner, will dominate deal making in the short term. So Okay, moving on to cross-border deals. So here's a quarterly view of cross-border deals going back to 1990. And you know, you can see the peaks and troughs again, like the previous slide, coinciding with boom and recessionary periods. It tends to be another category of deals that takes off during, you know, when times are good. Cross-border deals are definitely more risky in nature, and so they're another trait of a more confident market where buyers have the conviction to look overseas. Looking at the history, we saw some real growth in activity around 2013, 2014, when we saw you know, a lot of Chinese buyers moving into this space. And around this time, cross-border deals accounted for around 40% of global M&A. We did see these deals start to decline around 2019 amid, you know, there was amid trade wars and rising protectionist sentiment, which, you know, made the environment less than hospitable for cross-border deals. We saw increased scrutiny of deals, inward investments into the US and into the EU. So we had already started to see a decline before COVID, and then we saw, you know, cross-border deal making plunge to under 40 billion for 3 consecutive months from March last year. So you can see the drop off during the second quarter. They dropped to lows that we hadn't seen in more than a decade, and you can see the spike there. But again, another V-shaped recovery, so a huge rebound into the second half of the year. 1.6 trillion worth of deals have been announced so far this year, which is double last year's value, and it's the highest first 9-month total since our records began in 1980. And you can see the third quarter, it's a quarterly record breaker. Cross-border deals have accounted for 36% of global M&A so far this year. We've seen some mega deals pushing up these values, but the number of deals has increased sharply too, up 40% from last year to more than 12,000 deals, which is another all-time record. Buyers in the US are driving a lot of this activity. They alone have accounted for 37% of acquisitions abroad so far in 2021. Their cross-border acquisitions have more than doubled in value from last year. And then Australia, Canada and UK are the next most acquisitive nations. From a target perspective, the US is also the most popular destination for cross-border deals, accounting for 22% of global activity. The UK has also seen a very big influx of foreign buyers snapping up assets. It's the second most popular destination for cross-border M&A globally, and it accounts for 1/5 of all cross-border deals, with deals increasing by more than 250% year on year to an all-time high. Overseas buyers actually represent more than 80% of UK target M&A so far this year, which is a 6-year high, attracted by faster than expected rebound from coronavirus crisis and you know, the reduced Brexit uncertainty. Deals include DraftKings' 25 billion offer for Entain, the private equity buyout of supermarket chain Morrison's, and a $10 billion offer for aerospace and defence engineer Meggitt. So driven by a confident market, but there could also be some strategic considerations at play here, including concerns around the security of supply chains and also the prospect of a more protectionist regulation down the line. Also, SPACs play a part in a cross-border here as well, which we'll go into more detail shortly. But you know, SPACs started off as more of a US phenomenon, but we have seen more recently that they've started to spread to overseas acquisitions. And SPACs now account for 11% of global cross-border activity so far this year, and that's up from just 1% last year. Now let's look at some of the sectors. So here is this year's M&A by target sector. This year is in the sort of turquoise colour, and the comparison to last year is underneath in grey. And you can see technology is, by far the leading sector right now. It's way out in front, both by value and by number of deals. Tech deals have more than doubled in value from last year to an all-time high of almost 900 billion US dollars. In fact, it's more than double the previous year-to-date record that was set in back in the dot-com boom in 2000. The number of deals are up 47% to more than 10,000 deals so far this year. Tech deals account for 20% of deal making so far this year. Businesses are using technology to drive efficiency and connectivity, and digital adoption was accelerated by the pandemic, and this spurred on a lot of activity in the sector. After technology, we see financial, industrial, energy and power sectors, all with double-digit % gains from last year. We've seen a lot of activity in financial so far this year, some banks, insurance, some asset management deals. As you start to see consolidation in a sector, other companies, tend to begin to assess what they need to do to compete in the space. So, it can spur on more activity. And because conditions are right for M&A, CEOs and boards and their advisors have been very busy looking at the M&A playbook for potential opportunity and revenue growth. Healthcare is also interesting from a value perspective. It's the 6th most active sector so far this year. And we've seen a very strong year-over-year increase, more than double the value recorded at this time last year, with a 32% increase in the number of deals. And then down there at the bottom, we can see consumer and telecoms. They're the only sectors not to see an increase in the value of deals from last year, but they are both seeing double-digit % gains in the number of deals. In fact, every single sector has seen growth in the number of deals from last year. And 10 out of the 12 industries here saw value gains. And half of those actually doubled in value. So you can see this, again, a broad-based increase in M&A, many sectors here. This slide, this is a quick look at the largest deals so far this year. And this list is, very emblematic of the year so far. We can see the prominence of the US. So 9 of the top 20 deals involve a US target. The Warner Media Discovery merger, General Electric sale of its aircraft leasing unit. The sectors that feature highly on this slide, they were the ones that we saw on the last slide. So we can see the tech, financial, all appear here. Cross-border deals, 9 of the top 20 deals are cross-border in nature. We've got Canadian Pacific's 32 billion offer for Kansas City Southern. We've got the DraftKings Entain deal, and the tie-up between payments group Square and Australian buy now, pay it later Afterpay. Another thing I noticed when I look at this list is that 6 of these top 15 deals were announced during the last quarter, so it doesn't look like things are cooling down anytime soon. We're still getting these big deals in the third quarter of this year. And we're also starting to see some SPACs pop into this list. Again, we'll come on to SPACs a bit later, but we can see some of them here. MSP Recovery, Grab Holdings, Polestar. Again, the list is very emblematic of the year so far. Here, private equity. So private equity-backed M&A has been a very significant story over the last 12 to 15 months. The sheer number of transactions, almost 11,000 PE-backed deals so far this year, up 70% from last year and an all-time year-to-date high, with record levels of capital to be deployed. Buyout firms have struck deals worth more than 800 billion so far this year, and that's more than doubling in value from last year, and the highest level since our records began back in 1980. Private equity accounts for around 20%, so around a fifth of deals, overall deal making so far this year, which is the highest share since our records began as well. So a lot of records being broken here. Private equity acquirers have been very busy post-pandemic. Looking at fundraising, 2019 was the biggest fundraising year for buyout firms on record, and 2020 was only slightly weaker. So there's definitely capital to be deployed, and PE buyers were sort of perfectly placed to take advantage of some of the market conditions that we've seen, including the cheap financing. And on to SPACs. It would be very difficult to talk about the year so far without mentioning SPACs. Special purpose acquisition companies, the shell companies that raise funds via a listing with the sole purpose of finding a private company to take public. We've seen 276 SPAC combinations worth more than 540 billion so far this year. Activity has definitely slowed in recent months, but these deals still count for a pretty significant 12% of global M&A activity. And some of the largest deals include, as I mentioned earlier, MSP Recovery and Grab Holdings, which were both worth more than $30 billion US. And more recently, we had Polestar, the Swedish electric performance car brand, which was purchased for or combined for almost $20 billion US. So some really big deals here driving M&A activity, and it all starts with the SPAC listing, which is where I'll pass you over to Matt as he starts to walk you through some of the capital market trends.
Thanks, Cecile. Really interesting overview of the world of mergers and acquisitions. And a quick note, some questions were coming in while you were going through the numbers. Slides will be available in the recap email that we'll send to all attendees after this. So we'll certainly be able to include those in the recap. And all the values that we're seeing here are based on the deal value, so the purchase price of the target, in all the M&A activity. So the mega deals and any kind of overall value we're speaking of, it is the cost to the acquirer or the purchase price of the target. But as you mentioned, from an M&A perspective, SPACs have been driving, a good percentage of activity, and there is still much more to potentially come because we did see such a large impact of SPAC listing activity in the first quarter of the year. Over 300 SPACs listed mostly in the U.S. in the first quarter of 2021, and that has significantly declined, based on some guidance from the SEC that people are still awaiting, full guidance on how some of the transactions might particularly be regulated. But we do estimate that over 400 SPACs are still out there, potentially looking for targets with capital and have 2 years to do so. And so, that can continually be a driver of M&A activity, particularly as market conditions, might indicate kind of what types of companies, SPACs would be looking at. As you mentioned, some of them have been in, some more niche areas, and it's a new way for companies to become public, and has been quite effective. But I think we'll also begin to potentially see, as we did after the private equity decline in 2007, 2008, a kind of a focus on some of the more prolific SPAC companies or sponsors. So there are some SPACs or SPAC sponsors who have sometimes 6, 7 or more vehicles out in the market, and so as they have a track record for M&A activity, as regulation becomes clearer or as the marketplace for SPAC IPOs becomes clearer, potentially those might be those to come back up. But still, a pretty healthy number of companies still coming public each quarter and each month. But certainly nowhere near the levels that we saw in the beginning of this year. But as noted, plenty of capital to potentially be deployed as we move into the fourth quarter and into next year. So although we have the majority of M&A professionals on the line, they probably do have an overall view on kind of what SPAC IPO activity might look like this quarter and into next and into the new year. So another poll question: to what level do you expect SPAC IPOs to play a part in global ECM in 2022? Predicting either a return to first quarter 2021 levels, smaller but significant levels, or a dramatic decline from this year if we looked at kind of the full overall landscape. So a couple of moments to answer the poll here, and we'll see what the audience thinks about SPAC IPO activity as we move into next year. Okay, and we'll take a look. Smaller but significant levels. So still potentially having an impact. Dramatic decline from 2021 in second, but no return to the first quarter, which I think seems to be a good amount of market sentiment generally when you listen to kind of SPAC professionals and people who spend a good amount of time investing in or sponsoring some of those SPACs. That 300 plus quarter was certainly going to be a high water mark for the SPAC IPO market, but seems like most of the audience thinking smaller but still significant levels in this space. Excellent. So if we look at the second portion of the webinar here on capital markets, it's been a pretty significant and interesting year in the world of capital markets, starting with equity and looking at just all the different product types across equities in 2021. We are seeing all-time records across all of our categories. So traditional IPOs, SPAC IPOs, which we just mentioned, but also secondary follow-ons and convertibles. And so, every aspect of the equity capital markets is running at a 40-year high, and that's a pretty significant impact, certainly on fees, as we saw in those early slides. But it also, kind of adds, a different dynamic to many of the debates around the depth of the IPO market. Seeing some of the exchanges around the world really revitalized. So in the U.S., also seeing, kind of recent highs in Asia and Hong Kong and China, but also in London and other exchanges around the world. And the number of issues, so not just really large transactions, but the number of issues also approaching kind of near records. In the U.S., for example, we've seen over 300 IPOs, which really does kind of begin to compete with 2000, which was the high watermark for overall IPO activity. And we've struggled to really break even 100 IPOs for the last decade. And there's been a lot of debate around, is there a structural issue? Is there issues around the number of underwriters and number of brokers in the market that are taking smaller companies public? From a overall perspective, are a lot of promising IPO candidates being taken out by M&A? Those are the debates that we've been part of for over a decade now. But to see the IPO route really revitalized, again, over 300 U.S. listed IPOs this year, and almost 80 technology IPOs, which is already bested the full year total, so the strongest full year total since 2000. It's a really interesting time to be seeing these equity capital market activities kind of really revitalized. And so also follow-ons, which last year we saw kind of a record number of follow-ons as companies were using the market conditions to raise capital, but also to monetize stakes in companies to potentially unlock some value to use that currency and capital for M&A or for other activities. Really, as we've kind of mentioned over the last kind of year plus, is that in kind of every activity and every tool in the capital markets toolkit is really available to most CFOs and boards and C-suites. And that obviously brings, a tremendously busy time for their advisors, underwriters, and just general banking coverage groups. And so, to see the broad-based increases by number and by value has been quite interesting. I think there will be some choppiness from a quarterly perspective. You can see we did see a bit of a decline across each of the product categories in Q3. So most of those numbers are being bolstered by very strong first half of the year. But market conditions will continue to really drive the activity here, and certainly the corporate finance activity in general. An area that we just we couldn't really continue to see the broad-based growth is the debt markets. Just not feasible to really continue the pace that we saw in 2020. But over the course of the kind of post-financial crisis years, we saw a continued kind of slow exponential growth of corporate debt activity, both high yield and investment grade, both number of issues and proceeds in almost all regions and sectors. And it was a continued kind of each year would break the previous record. And we did see kind of a weakening of that in 2020 until the pandemic came. And then all of a sudden, the debt capital markets were the place to be for many issuers, many distressed industries and companies. We saw kind of record levels of capital across many different industries, but also very opportunistic companies coming to the market to take advantage of conditions that we thought we'd never see again. Many people said 2008, 2009 would be kind of the best years for corporate debt because of the kind of just general environment that we were operating in. 2020 has certainly continued to has changed that trajectory. And although we are seeing a decline in 2021, it is still still very elevated compared to previous years. And we are seeing still many issuers taking advantage of the market, and many companies going through M&A activities and private equity companies engaging in buyouts, taking advantage of the market. So again, a full year. Kind of 2 years. If you look at the bond market in general, really kind of tremendous overall view, and you can see the quarterly volume, that spike in Q2 of last year, really driving kind of just that chart that will forever be kind of the pandemic quarter, but still kind of very healthy levels of activity, and again fees down just 4% from an overall DCM perspective. One of the newest areas that we're really focusing on within debt capital markets is sustainable finance, and that's something that's also grown pretty significantly post-pandemic. The green bonds have been a product in the market for a good number of years, and we've been tracking kind of the onset and the slow growth of the green bond category, and that has certainly lifted over the last 8 quarters or so. But at the beginning of this year, we have seen a very significant increase in new products and innovation in the space. So that is companies raising capital for green purposes, for social, sustainable purposes, and many companies kind of really evaluating this asset class as a way to diversify their overall capital raising kind of strategy. Certainly investors are looking for these types of transactions, and really the whole ecosystem of issuers, the underwriting and advisory community, as well as the investor community, all looking at this as a very new and interesting asset class. And so we have seen a real growth over the past 3 quarters, or all the quarters of this year. A bit of a decline as we moved into Q3, as the sustainability and the social aspects, a lot of that was slated towards pandemic and vaccine relief, has fallen back a bit. But seeing corporate issuers as well as agency and sovereigns really take advantage of this new and growing market. And it does account for about 12% of overall global debt capital markets this year, which is up from 5% a year ago. And so I think this will be a new area of focus. We're seeing, even in the third quarter of this year, brand new companies coming to market with their first ever green or sustainability bond. And I think that is becoming obviously part of the conversation as companies look at their financing options. Now, as interest rates begin to increase, as issuers and investors potentially look at transparency in the market, how have proceeds been utilized, what projects or what areas have been improved or potentially changed based on the capital raised here, and that will all come into play. But a very new and interesting market, and we've been publishing these numbers for quite some time, but have continued to expand our definitions of sustainability and sustainable finance from a bond perspective. So new transaction types and really tracking innovation and creativity there. But then also taking it further into some of the other asset classes. So looking at sustainable lending, Obviously the loan market, a huge area of capital, and looking at sustainable or green or ESG loans, and also looking at sustainable ECM and M&A. We've been able to look at a group of industry codes that look at companies in this space. So it's sustainable product types, so the green bonds and sustainability bonds, which are really driven by many of the principles that kind of bond associations around the world have begun to drive transparency in, but also companies who are operating in that space or who have sustainable business models. And so looking at equity capital raising, looking at some of the sustainability offerings that we're even seeing in the SPAC or the IPO space, although these numbers don't include SPACs at the moment. And then also M&A activity, where companies are buying areas of sustainability, and we've seen SPACs play a large part in that as well, where solar and electric vehicles and other types of sustainable categories are really a popular activity for SPAC acquisitions, but then also strategic acquisitions as well. So all of these categories are running at year-to-date highs, as you might imagine. But the quarterly view also shows that there might be a little bit of choppiness in the market, particularly around lending or certainly M&A or equity capital markets activity, where not every issuer is going to be bringing a sustainable category or a sustainable product to market in the way that they might be regularly kind of refinancing or looking at just the general capital market flow of activity. So again, I think a huge area of focus for many in the market, and certainly for us as we engage in kind of trying to track and really show leadership in the market and overall key themes. But I think hard to kind of go through the year without really kind of talking about this underlying kind of new area of focus, and really seeing some of the new areas of innovation from a product perspective, and then also some of the new companies who are innovating that might be interesting, either to raise capital or to potentially be purchased by SPACs, private equity, or a competitor or someone in the strategic space looking to diversify. So really, I think an interesting overall kind of area to focus on, and we'll certainly be doing more of that in the coming quarters as this market continues to change, and an area that we're certainly focusing on. So that wraps up the overall kind of slide presentation. If there are any questions, feel free to include those in the chat. There is a question coming in around inflation and how that might potentially kind of impact the world of M&A. It is interesting because we have 40 years of records of M&A activity, and in those 40 years, inflation really hasn't been a very large issue. The last kind of major inflationary periods was kind of late 70s. And so it is interesting that many of the kind of deal makers and kind of corporate investment banking and legal community, inflation is going to obviously have a very different impact on business models. And as Lucille said, kind of confidence is the name of the game. And if there are changes to the overall dynamic for an M&A transaction, obviously that's going to have an impact on confidence or the ability to feel confident, executing in that transaction. So I think that's one of the key themes that most will be watching as we move into the new year. Kind of what impact that might have, kind of on the corporate finance and corporate deal making, kind of general area. It's a really interesting question, and one that I don't think anyone really particularly knows the answer to, because we just have not seen that have an impact on some of the factors that generally go into deal making, but certainly one to watch. Just looking to see if there are other questions as they come in. There is a question around kind of just general SPAC activity and the pipe or the private transactions that oftentimes come alongside pipes. Most of the market analysts that I follow, and certainly a lot of the commentary on the SPAC market, has noted that the complementary or parallel pipe transaction has been a bit of kind of a part of the reason why there has been a bit of a slowdown, that that there is a little bit of a backup in that space. And so to have that the co-investment alongside the additional the original kind of SPAC investment, and then the coinciding PIPE, that I think that has been part of the calculus that has changed a bit, where there's obviously more competition in the space, more competition for getting investors for that co-investment, and so I think that is definitely part of the dynamic that is slowing down the overall just general pace of activity that we're seeing flow through from capital raising to M&A. Looking at some of the questions coming through. As noted, we will introduce the slides as they the full slides as a recap for all attendees. Lucille, as a starter or junior outside of the M&A industry, how can individuals learn more about the industry? Any key tips for where you spend your time learning about the world of deal making or keeping up on key themes?
I think if you have access to any of our products, then certainly have a look at our Deal Intel app. A really great resource, plenty of quarterly reports on there, but also some great weekly views. We have a weekly scorecard which shows the most recent deals, the most recent league table positions, and volumes, and a monthly scorecard as well. So definitely, if you have access to our products, then go there. Also on Refinitiv.com, there's access to some of these reports here. They're all free to download. All you need to do is register. So perhaps we can share that link at the end of this as well to some of our most recent reports and blog pieces as well that have come out recently.
Yeah, absolutely. And the link to the Refinitiv.com page is in the resources section. So there's some great thought leadership from our team around some of the key themes and trends. A question coming in around supply chain issues, and how that might factor into deal making evaluations. Another key area, I think that many are watching, and I think some of the M&A activity that we've seen has been related to supply chain, where maybe there's some acquisitions happening to bring companies or companies within a particular supply chain kind of closer together or closer to the company that needs that. I think we've seen some of that in the technology space, certainly. But again, I think those just like inflation, a lot of analysts certainly and just general kind of broad commentators are looking to see if it's going to be kind of a longer term theme or just kind of a post-COVID kind of potential issue that may clear up in coming quarters. And so I think that is certainly one to watch. I mean, the ability to not deliver product or the ability to not deliver, the product on time or, affecting, the world of holiday gifts around the world, that could certainly have an impact on companies, bottom line, top line, and certainly, how they might think about doing a deal or engaging in maybe lead strategy in what type of deals they might want to do. And so, potentially kind of bringing in-house some more of the supply chain or even seeing consolidation in some of those. I think that's still very much a question that will impact kind of deals as we move into the new year, and particularly see how that interplays with any of the changing macro or interest rate calculations that might occur. So it looks like questions are slowing, and I think it's probably a good time to wrap up. Lucille, thanks so much for a kind of a great overview of the world of deal making as we watch it every day. It's been a fascinating year. Sometimes we have to kind of really kind of dig into the numbers to ensure that the numbers are just sometimes the charts look a little bit funny because the increases, as you even noted in that number of deals charts. It's been really interesting. So we will look forward to Q4. We'll get together in January and recap the whole year. But thanks everyone for joining, and look forward to speaking to you soon.
Thanks everyone.